Hello, everybody. Welcome to the last week, the last day, of September, the last day of the quarter, too. I'm Tim Knight. We're here to look at the wonderful world of charts. It's been a very good day, finally. It was a really rough week last week. And curiously, one of the things that's made this a good day for me is China's continued mega stimulus of its market as it prepares to shut down for an entire week for their golden week. But the communist dictatorship of China has basically blasted their markets with ungodly amounts of fresh cash, dropped interest rates, dropped reserve requirements, and of course is gently encouraging folks to buy, and it's worked spectacularly. And therefore, I've been indulging in something I used to never even think about, which is Chinese stocks, because they are insanely overvalued, I think. I tend to look for overvalued items. The past week or so of Chinese stimulus has created some new opportunities I didn't anticipate. I've got all the charts ready to go. Let's jump right in. We begin with a spider. We've got a doji going right here. Lifetime high was last Thursday, a little bit lower Friday, a little bit lower today. Boring, but there's plenty of opportunities underneath that dullness. Here's the diamond. Big old shooting star pattern on Friday. That sucker right there. And we're tumbling below it today. Nothing dramatic, not even half a percentage point, but I will gladly take it because I have 14 bearish positions and all 14 are profitable. And since we're right on the heels of the highest levels in human history, that's a good feeling because the picks have been working out great. Well, here is the culprit. Here's FXI. And FXI was a complete dog until 9/11, kind of a magical day in markets, it seems. And from 9/11, it started kind of sneaking higher and higher and higher. And then they threw the fire hose on it, and it went much higher, then exploded higher last week, and again, and again, and then again today. And I was stunned because I count the minutes till futures open on Sunday. I'm very interested in what's going on. And they opened, and the U.S. markets were doing much of anything. The Chinese markets are going absolutely crazy. The FXI was incredibly high, and the U.S. market started to play along as well. They turned green based on, the biggest, I think I read that a 40% market gain in Chinese stocks in just a few days, one of the biggest market gains ever. Maybe the biggest market gain in such a short amount of time. And but FXI at the moment is basically a giant red bar. It opened at near the high. It's presently trading near its low. We got rather close to the levels we had seen way back on Jan 26, 2023. That's what this red line is anchored to, but we didn't quite make it. And even if the Chinese market has begun a brand new era of going up, which I doubt, I think it would be very easy to take a hard fallback and undo more than half of the recent gains we've seen. So yeah, very bearish on China short term. And there's plenty of individual stocks to pluck out, like there's Alibaba here. And, even with all this help, this is a third the value it was back in 2020. So person who bought then held it for 4 years would be looking at approximately 70% loss after all of this artificial government stimulus. And you can see how sharp this has been. We got up to around about 112. I could absolutely see it losing 30% of its value, before the year's out, maybe even the next week or so. Anyway, moving on. We'll turn back to China in a sec. SMH, the semiconductor index, is down nicely, about 1.8%. This, of course, is led by NVIDIA. The peak on this was back on July 11, got up to 283.07. It's about $40 lower than that right now. It's been through some spasmodic moves here, but we peaked on this. The counter trend peak was last Thursday, fell nicely on Friday and falling a bit more today. Within that, there's AMD. I've got puts on AMD, January puts, just like almost everything else I've got. And the hard stop for me is this dashed red line that you see right there. ARM, I'm even more enthusiastic about. This is down about 2.5%. It pushed up against the base of this topping pattern. I would mention incidentally that the fella behind ARM, the firm, more specifically SoftBank, is evidently also pouring $500 million into OpenAI, which new valuation will be $150 billion. And OpenAI has never made a penny. They have sales of something like $3.5 billion a year now. And even with all that money coming in, they're losing $5 billion a year. And as you've probably read, they've made the recent switch from a nonprofit, basically good for humanity organization into a for-profit organization, which Sam Altman has adroitly converted them to. And they're really good at one thing, raising money, and they're doing it again. And if SoftBank's recent history, WeWork, is any guide, I think you know what this probably means. So anywho, yeah, ARM Holdings backed by the same folks as WeWork, and now OpenAI, big investment in that. We'll see how that goes. NVIDIA is down a bit more than 1%. It's still banging around the symmetric triangle pattern. And of course, what I want to see is a failure of this trend line. And this trend line has been in place back to January 2023 also. So that's kind of cool. Overseas, EEM down about 1 3/4%. We went ripping higher on Friday, tagging that dash red line. We're starting to burn some of it off. It's not a very clean pattern. The options kind of stink, so I don't go near this thing, but it's interesting to glance at. And EFA, still within its wedge, tagged that wedge last week, and it's starting to ease back on that as well. So we're down about 0.6% on EFA. Now, next week, Tesla, is it next week? Let me see, 10/10. Yeah, that's next Thursday. Has their big robo-taxi event, the We Robot event, down, I think in Southern California. It's an invitation-only event. I imagine there'll be webcasting, I would suppose so. I think there's a lot of excitement around that. Take it as a buy the rumor, sell the news if you like. Long term, I'm cautiously optimistic on Tesla. For the immediate moment, it's pushed a little above this trend line. It's below it right now, but you know the old story here. We've got this quartet of resistance zones right here. We've got 3 Fibonacci's and 1 trend line holding things back. It might not be a terrible place to sell some if you got some. Yeah, if it pushes through that descending trend line with some gusto at some point, maybe we've got a whole new era, and that trend line will just get left in the dust, because Tesla is kind of the only company left standing. All the competitors, your Neos and your Go EVs and your Nikola, either frauds or total disasters. Tesla's been a success. Lucid, Rivian, little bit of a success, but they're by far the king. I bought puts on gold Friday. I think I told you rather sheepishly about that. And we're down 1% almost on GLD. And I suspect it'll probably find stability at the top of this channel. GDX, the miners, also down almost 2%. So this is just burning off like I supposed it would. I mean, I kept kind of wondering, how high is this thing going to go? It finally peaked on Thursday, retreated on Friday, falling more today. And here again, I suspect this gap is a pretty alluring target for that. I wanted to swiftly bang through my existing positions. AMD I mentioned, and all these are basically just long puts. These are simple directional plays. I also mentioned ARM already. CrowdStrike, bit of a gamble because I'd never really traded with this before, but so far so good. It's kind of behaving nicely, working its way lower slowly. So good, like what I see. I mentioned gold on the short side. JD, this was one I got into today because Chinese stocks were zany priced. So I bought puts on JD, working out well there. Lumen Technologies, got into this one a couple of weeks ago. Enormous top on this one and down about 3% today. Huzzah! I don't usually like buying puts on stuff that's like a single-digit stock, but these options are so well traded, it works out okay. So, and it's such a nice pattern, I couldn't help myself. And then another Chinese one, never traded in my life, but I am today. Yum China, YUMC, big old red bar on that one. Some other positions, Amazon, AMZN. Look at this, trend line starting to crack. That's nice. That's anchored down to the August 5 bottom. Today, first time since then, cracking through the trend line. This could be a good thing. This is the 5th red bar in a row. Yay. Salesforce, got into this one last week. There's the stop, the red dash line, down about 2% on that fella. GM, another terrific day, almost a 4% drop. And don't let PE scare you away. The PE on this is like 4.7. It seems like a bargain. I don't use PEs. I mean, some things with no earnings ever just go up constantly. And some with a PE of 2 could be headed to bankruptcy. So yeah, I just based it on the chart. Google, that is to say Alphabet, pushed up against the red dash line on that one. Nike, another good day here, about a 1.6% drop off of the red dash line. Lovely pattern there. PDD, talked about this one, I think, on Friday. Big old reversal there. This morning I thought I might have to ditch this one. No, I'm going to hang on. So that one's reversed hard. And then Shopify up a little bit, but we've stalled out the past 6 days or so below that trend line. So I think it's going to work out just fine. Oh my heavens, VIX, the volatility index. This VIX chart goes back to 1992. So we've got like a third of a century of data on this sucker. And as you can see, it's a pretty cyclic beast. And the last incredible high on this one was, of course, back in the COVID crash. We got up to nearly 90. And since then, for years, it was just lower high, lower high, lower high, lower high, like it would never revivify again. That changed this year. That changed last month because we blasted through this zone here. So this lower high is in the dust. We got a higher high for a change. So I think that multi-year suffocation of volatility is behind us. And thus far, shorter term, we do have in place, here's the ultimate low, higher low, higher low, higher low, and higher low. If we can maintain that, we've got a shot at another bit of excitement here. And I think there's one or two things going on between now and the end of the year that might just shake things up.